The following financial analysis is powered by AlphaStockAI.com. For deeper insights into these companies and the latest market trends, visit AlphaStockAI.com. China's tech landscape is more competitive than ever, and when it comes to profitability, three giants, Alibaba, Baidu, and Pinduoduo, are battling for dominance. Each has a unique strategy, yet their financial performances tell a fascinating story of shifting strengths, rapid innovation, and increasing pressure in the e-commerce and AI sectors. So, who is leading the charge? Let's start with revenue growth programs. In contrast, Alibaba posted a modest 5% revenue increase in Q3 2024, bringing in 236.5 million RMB. Pinduoduo is on fire, with its Q3 2024 revenue surging 44% year-over-year to 250 million RMB, 99.4 billion. This growth is driven by a booming transaction services business and aggressive merchant support billion. The company's international e-commerce expansion and AI-driven cloud services contributed to this uptick, but domestic competition remains a challenge. Meanwhile, Baidu's Q4 2024 revenue declined 2% year-over-year to RMB 34.1 billion, primarily due to a struggling online marketing segment. However, Baidu's AI cloud division was a bright spot, growing 26% year-over-year, signaling a major transformation toward AI-driven revenue streams. Revenue growth is one thing, but profitability tells a different story. Pinduoduo dominates here, boasting a non-GAAP operating margin of 27% in Q3 2024, significantly outperforming both Alibaba and Baidu. Over the past 8 quarters, Pinduoduo has consistently maintained higher net profit margins, averaging around 26.5%. Alibaba, on the other hand, has seen its net profit margin fluctuate between a low of 1.52% to a recent high of 18.62% in the latest quarter. An encouraging rebound, but still below Pinduoduo's steady performance. Baidu remains in the middle, with an average net profit margin of 15.5%, supported by its AI initiatives but hindered by weaknesses in advertising revenue. Alibaba's biggest concern right now is its shrinking free cash flow, which plummeted 70% to 13.7 billion renminbi in Q3 2024. A massive portion of its capital is being redirected into cloud infrastructure and AI investments, a long-term strategy that could pay off, but at the cost of near-term profitability. Compare that to Pinduoduo, which reported RMB 27.5 billion in operating cash flow in Q3, highlighting its superior ability to generate cash while still investing in platform growth. Baidu, though making significant AI investments, has managed to balance profitability more effectively, with a non-GAAP net income of 6.7 billion RMB in Q4 2024. E-commerce competition is intensifying, and Alibaba is feeling the heat. While its Taobao and Tmall divisions still dominate the market, revenue growth in this segment was a mere 1% in Q3, reflecting stagnation amid rising competition. Pinduoduo, on the other hand, is aggressively gaining market share, with transaction services revenue up 72% year-over-year, fueled by strategic logistics enhancements and merchant incentives. Meanwhile, Baidu is making a different kind of bet, doubling down on AI-generated search results and autonomous driving, rather than competing head-on in e-commerce. But the real long-term battle is in artificial intelligence. Baidu's AI cloud business is expanding rapidly, now contributing 7.1 billion RMB in quarterly revenue, up 26% year-over-year. The company's open-source AI model, Ernie, and its autonomous ride-hailing service, Apollo Go, which handled 1.1 million rides in Q4, showcase its AI-first strategy. Alibaba, too, is investing heavily in AI, particularly in its cloud division, where AI-related product revenue has seen triple-digit growth for 5 consecutive quarters. However, Pinduoduo remains more focused on ecosystem development and logistics rather than AI, allowing it to remain highly profitable without the heavy research and development expenses that burden its peers. So, what does this all mean for investors? Pinduoduo remains the most financially efficient of the three, with strong revenue growth, high profit margins, and exceptional cash flow. Its ability to execute without excessive spending makes it a compelling buy for those looking for strong profitability in the Chinese tech space. Alibaba, despite facing competitive challenges, is making aggressive AI and cloud investments that could pay off long-term. However, with free cash flow shrinking and domestic e-commerce growth stalling, investors should keep a cautious eye on its ability to sustain profitability. Baidu presents an intriguing case. While its advertising business is struggling, its AI cloud expansion and autonomous driving initiatives signal a long-term shift that could yield massive returns. Investors betting on China's AI revolution may see Baidu as a high-risk, high-reward opportunity. For those seeking short-term gains, Pinduoduo looks like the clear winner. But for invests,